Good evening, everyone. My name is Paul Young. I'm going to walk you through the explanation of how offshore tax shelters and why they're created and how they're difficult to detect. I'm not going to pick on anybody particular. I'm just going to talk about the system itself, how it's designed in terms of things where you can have the ability, the potential where things can move out that may not necessarily be ethical, but it'll give you an idea of what needs to be done as we move forward. So this is one perspective, tax shelters, offshore ways of moving money around. It's not the only perspective. You're more apt to go out and see what IRS says from the US perspective, CRA from Canada. Go out to the UK and look at what their finance areas say. Look at what major Big Four CA firms say about the old tax shelter and income avoidance rules. It's the best way to talk to the experts. I'm just going to illustrate the impact. I'm going to illustrate a lot of what's going on in terms of how you close it down. This is a little bit about myself. I'm a CPA CGA by trade, so I've got a significant amount of experience in global finance. Now I'll talk about what Panama Leaks are. I'll talk about tax shelters, both individually and business. I'll talk about the UN, and I'll talk about the OECD. So this is in the news right now, and I'll be quick and succinct. The Panama Leaks was something that's been going on for almost 40 years, and it's basically a way that different people have been able to use the system to move money offshore to areas that basically there's been no disclosure around how much those investments are earning as a way to avoid taxes. So this came out recently. It's an area that we need to kind of look at things in terms of who's involved with it, but that more details will come up. That I'm not going after that perspective. I'm just looking at the perspective of how this thing was done. Now, typically how a tax haven or shelter works, the taxpayer has a bank account. He works with a lawyer accountant, creates up a holding company in a country that's known to be a tax haven. Now, what ends up happening once this company is created, the money flows through a series of transfers to that holding company as a way to shelter it. That's how it works. Now, who's involved? Well, banks have to be involved because they have to illustrate the cash going in. Now, if there's government money involved, then government actually gets involved too as well. So that's where we need to be very careful that the overall oversight in terms of how money flows out has to be watched as part of the solutions. The accountants themselves try to see if there's way within the rules to see if they can move things offshore to maximize benefit for their taxpayers. Because the taxpayers themselves are hiring these lawyers and accountants to find ways to better get in return on investments. Now, I'm not here to criticize accountants or lawyers in terms of their role. I'm just showing you how basically things are done. Enforcement. This is one of the toughest areas. The way that most countries enforce tax treaties or rules is basically having tax treaties. So basically that's part of the goal. So in particular case Panama, Canada didn't have a treaty with them. So getting disclosure around that, you're asking the taxpayer to be honorable and disclose that. Now, I can't say how people will do things ethical or not ethical, but some of the decisions that are made some people may be in play here in terms of what needs to be done going forward. Tougher enforcement. And so when we catch people like that, the rules for enforcement must be very tough. But that being said, the cost of enforcement is very difficult because the complexity of these transactions is very difficult to detect. So it makes a lot of money involved in terms of how you track these transactions through these number of companies to get the complete picture. There's a lot of what we call forensic audits required. Disclosure of assets by the bank. The banks have always been hesitant to disclose holdings. There needs to be an enforcement as part of the Basel II reporting, Basel III reporting is more and more disclosure around that. That has to be part of the overall agenda as banks need to disclose all holdings. That's something that has to come out as part of the enforcement. Why did I pick on the UN? Only the reason I pick on the UN, it's a great organization. They do wonderful work. However, one of the biggest concerns as we move forward with a solution, we need to probably have more audits and oversight so that when money goes through different organizations within the UN to channel down to these countries, it's going to the exact results it needs. Whether that's schools or water, it's not going in some sort of trust fund and kickbacks or anything like that within a government as part of making sure that money's spent the way it's appropriate. That means audits and oversight need to be happen from the UN's perspective. And that will help try to deflect anything where you might have a politician that may not be wanting to do things ethically. I'm not here to call any names out. I'm just saying in general, you want to clean up the corruption. And you're more welcome to go out and look at some of the worldwide indexes that measure corruption of government as the UN does that as well. So we need to toughen up where we see corruption and fight it. Corporations, they come into play on the OECD. OECD has put together tougher transfer pricing rule, more disclosure around where income's earned, but tougher in the rules up in terms of how income can flow between countries. Now the agreement right now is signed by 31 nations, okay, with France and UK being the biggest two countries in part of that deal. Now that being said, Canada is looking at this, as well as the US, is toughening the overall transfer pricing rules to make sure that the system is fair. Now, this presentation gives you an overview of what needs to be done. I'm not here to criticize or call names out, because that's not right. Any sort of enforcement will be up to the governments themselves to call those enforcement out. But what needs to happen is it's not one area that needs to be done. The governments themselves have to get their revenue taxation groups to have stricter rules in terms of looking at tax treaties. It also means the UN and other worldwide organization, whether it's the IMF or OECD, has to come into play to help kind of work with the various countries to toughen the rules around how things are moved. Banks also have to be, as part of any sort of Basel III reporting, to strengthen how the cash flows out, to put tougher rules on disclosure so that they work with the taxation groups of various countries to disclose how these funds are working. I'm all about solutions. Okay, it's all about bringing that income back to make sure people do things within the rules, and that's what I'm about. I'm not here to call names out, but I want people to understand that it's on multiple angles that you're going to are required to eliminate these tax havens from happening, to eliminate the exposure that somebody might not be doing things within the rules properly. Thank you.